You know, it's interesting. The stock market today is not just reacting to about a week's worth of economic data that came in one day, but it's also reacting to the fact that we've seen the first three up days in a row since August. So, you know, clearly we've had a positive trend in the near term and a very powerful one. So it's, you know, it's a market that's sort of looking at a low volume day. There's fewer participants today because of the holiday. It's also looking at a market that in the short run has had a significant run, and it's also dealing with disseminating a lot of news. So it's not surprising to see the kind of waffling and fluctuations we've seen in the Dow all morning. Well, it's interesting because there's a dichotomy of forces here. Certainly the housing numbers continue to worsen. I'm not sure if we have successfully priced that into the market yet. The flip side of that argument is, you know, we just got good news from the federal government in terms of residential real estate and mortgages and loosening of credit with some assistance that's being focused directly at the residential real estate market with the aid to both the GSEs, Fannie Mae and Freddie Mac. So, you know, on the one hand, you're seeing mortgage rates adjust a little bit to, you know, the new news that there's going to be availability of credit, or at least the credit markets on the residential real estate side, the mortgage side, should be easing a little bit with the backstop from the government. The bad news is there just is a very, very sour environment in residential real estate in particular. So it's hard to say how much of this bad news has already been priced in.